Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors, and on down day except for feeder cattle futures. And Kevin, we continue to see a lot of fun and technical selling in the grains, kind of a hangover from last week's lower weekly closes here. How much more pressure do you think we're going to see?
Well, individually, I think there may be some differences. To start with that question, I look at the wheat. It acted a little better than we were seeing at the end of last week. I mean, we came off the lows a little bit. We didn't close on the lows, and gosh, from a flat price standpoint, you're talking about Chicago flirting with going under $7 in the
Wow.
May, and there's just no fundamental reason for that I could find. In fact, I can find a bunch of fundamental reasons we should probably, start rallying a buck from here. But corn, I mean, it's tech. The tech traders are going to sell that down a little bit. We'll see where the bidders are. I don't think it's very far below us. We're going to find quite a few orders to buy. Soybeans, on the other hand, technically they look scary to me. You take the stairway up and the elevator down, and it looks like we're getting on one of the top floors. So I'm nervous about that market, and I'm curious to see if that breaks. What is that going to do with corn and soybeans? I feel like corn may get drugged down because it has a similar fund structure, yet wheat, everybody's short. So will it rally? I mean, I don't think it will in that environment if soybeans fall off, but it's going to depend on the news flow a little bit. So
Yeah.
you've got, they're all related, but in this case, we may see some deviations coming up.
Yeah, wheat was the first to break, though, and like you say, from a fundamental standpoint, it feels like we don't have any war or weather premium in this market.
No, we don't right now. We're in that odd gap between, the old crop demand story and the new crop supply story. So, and when I look ahead, we're going to be headed to the fourth year in a row where production is below demand in the wheat balance sheet. Granted, I think the USDA's demand number in the 22-23 year is too high by a little bit. I still think production is under it. And next year we're going to be under it by a lot. So you got to question how low we need to go. So,
Do you think the corn market is still feeling the hangover? Maybe not so much from the USDA Ag Outlook Forum, but just this idea that if we have decent weather, we are going to see a bigger ending stocks number this year?
I think that's a big part of it. I mean, we're in that day and age where, I miss the pit trade so much and those guys that were there and just the human interaction and the human emotion in it. And everything's so computer driven now. And those numbers, though they're meaningless to us, the computer looks at that and say, oh, that's a big number. It looks like we should be increasing our, corn carryout projections.
Soybeans have held up better than corn and wheat, but how long do you think that can last, especially with Brazil's harvest coming on?
It's due for a pretty big pullback. It's had everything go its way. We had the Argentina weather. You had the funds liking it, selling the wheat with it. And so it does just feels like we're headed to that moment where, the rug's going to get pulled for a little bit. It doesn't mean we fall clear out of bed. It just means we're set up for a pretty big pullback, in my opinion.
So do you think there's still opportunities to do some selling in this market or not?
Oh, for sure. You still got old crop over 15. New crop's not bad. I mean, you can make money at that. And, and I've been telling people is, the way the global economy is right now, there's going to be few and far between on things you can make money on. And so we got to be careful. It's easy to get the supply ideas going on and say things are going to be so tight, but then we got to, people have to be able to afford them. So it's a challenge. It's a very challenging marketplace right now, driven by the macros. And so,
Yeah.
we'll see.
Which you and I didn't even talk about yet, but really last week, a lot of it was risk off. It was the macro environment that really caused a lot of this fund liquidation too, wasn't it?
Oh, for sure. I come up, this is a very common sense approach. We raise interest rates. The Fed can't afford to, they're not going to be able to afford to pay the interest on it. If we drop interest rates, we get runaway inflation. I mean, there's no good answer to it. I see no soft landing. I don't see any way to come out of this without, a pretty big purge. So the question is, what does it do to us grain producers and livestock producers? And that's the hard part. And it's trying to juggle that with the technical trade and
Yeah.
very challenging marketplace.
So talk about the livestock, cattle, the feeders making new contract highs here today in the back months with this lower corn. But the live cattle futures kind of disappointing that we kind of faded the cattle on feed report.
Yeah, that was a good report, and I'm surprised we did that too. I probably just getting ahead of itself. My only red flag for the whole complex was just the fact that, you know, the consumer's got to be able to buy this as we go up. And I don't think we're seeing resistance from that yet. I think we have a ways to go. So personally, I think we just got ahead of ourselves a little bit and probably need to consolidate for a bit. And, you know, feeders were a buck off the high, and, you know, and they closed up, but not that far. So we'll see what happens tomorrow.
Yeah, and hogs
So,
can't seem to get much traction either, can they?
no, they sure can't. I'm a little frustrated with that market. I thought we'd be seeing a little better numbers by now, and you know, demand's good. Um, the prices at the store are good. You would think it'd spur some demand.
Yeah,
But
no doubt. All right, thanks for joining us. That is Kevin Duling with KD Investors with Markets Now.